Hello everybody, I wanted to create this video about GameStop as I promised to a lot of people because there's a lot of misinformation of what happened with Wall Street bets and so forth. I wouldn't say misinformation, but a lot of exaggeration. There's a lot of people that are fairly famous on the internet, but they're not professional traders, so you might want to take their opinions and expressions with a grain of salt. So the numbers just don't add up for me, and I'll explain to you why. But first, again, let me tell you about a little bit myself. My name is Edgar Hambartsumian, and I'm a founder of StocksBootcamp.com and the hedge fund manager, the CEO of Avalanche Partners. Wall Street Bets, they have, about 3 million followers, right? So out of 3 million followers, do the math. Let's say, I'm going to say maybe 10% were diehard followers, right? So that's like, 300,000? So out of 300,000 people, how many do you think took action? Okay, how many do you think bought that exact stock at that same time or the next couple of days? Because there's a couple of stocks like American Airlines and so forth that they were buying. Cost was another one. So you got to understand, out of 300,000 people, let's say, I don't know, let's take out another 10%. So that's 30,000 people. Now let's say 30,000 people took action, okay? And what is the amount that they bet? That's another thing. So let's say I'm going to say on the lower end, 10,000, on the higher end, 50,000. So let's take a median average of 30,000, okay? So $30,000 was bet by each person. If you average it out, you smooth it out. So 30,000 people bet $30,000, okay? That's $1 billion. Now, could $1 billion flow cause a short squeeze? Yes. 100%? No, because they could have exacerbated it and forced other people to come in and bet. But was it the only cause? No. This could have been a war with two hedge funds, just like it happened with Herbalife and Carl Icahn. This happens all the time when two major hedge funds take opposite positions and they start going head to head. And I think WSB exacerbated the position. Sometimes I'm in a situation where a stock flatlines and nobody wants to buy in. And then I get in with, let's say, 100,000 and long position, and then some fund or institutional trading comes in with 2 million to short and push me down. So maybe this war was going on between two hedge funds, and then Wall Street Bets came in and pushed it up. Possibility, but was it the only cause? I highly doubt it. GameStop is now a $4.5 billion market cap company. At one point, it was just another retailer that was going to go under, and the market sentiment is that it is going to happen because people should buy games on Amazon. Why are they going to a big box retailer, right? So, but GameStop, I still enjoy going into GameStop and picking my games there and asking questions. So it could work. There are retailers out there that are doing fine, like Dick's Sporting Goods, Nordstrom, Macy's, JCPenney, Sears, are all going under, but there are retailers out there that are making the right moves. They're tapping into the online business side and they're improving their online business. So am I going to say for sure GameStop is going to go under? No. Is it grossly overvalued? Hell yes. As a matter of fact, I lost $4,200 on GameStop because they halted the trading and it just literally gapped down and then went down another $20 within a few minutes. So I was like, this is like rolling a dice at a casino. So I stayed away. But I did make $1,200 from American Airlines. So that kind of offset some of the gains, even though I lost a couple of grand. So American Airlines doubled overnight and then it came back down. So when it goes double overnight, you got to short it. So some brokers allow shorting, some don't. And I want to touch a little bit about short selling and what a short squeeze is, because some of you have no idea how the market works. Terms like short squeeze and naked short selling might be out of your knowledge base. So short squeeze is when a fund who's heavily shorting a stock tries to buy back at a market order or limit order and to cover their positions, to basically buy back the shares, and this causes the stocks to surge. So that's why when WSP was creating the momentum or came in afterwards, it actually pushed short sellers to get into a more panic mode and start buying back stock to cover their positions because they were going to lose a lot of money. So that's short squeeze in a nutshell. And then short selling, it's the act of borrowing somebody else's shares and selling it at the open market, getting the cash immediately, and just sitting on cash, waiting for the stock to fall. You buy back the same amount of shares for cheaper, pocket the difference, give the original owner its shares, and that's how short selling is in a nutshell. And then there's naked short selling, which should be illegal, and it was illegal after a while with SEC, and then now it's legal again because of a loophole. But it's the worst thing that's causing a plague on companies, because naked short selling means that you're actually borrowing shares that do not even exist. So with TD Ameritrade that I'm using, sometimes I want to short a stock like Tesla or QuantumScape, and my broker says no available shares to borrow. So imagine if the broker doesn't tell you that and gives you a short ability, fills up your short sale order, even though he doesn't have any long-term investors who want to lend those shares to you to short. That's called naked short selling. And that should be illegal in my opinion, and I'm sure in a lot of people's opinions, because that's creating an unnecessary supply and demand trifecta, and it's creating unnecessary panic sales. And Elon Musk is another guy who, he hates short sellers, and I don't want to get into this topic, but in trading Tesla, a lot of times I don't want to say he was responsible, but a lot of news events came out at a time where a lot of people were short, a lot of funds were short, and Tesla just gapped up out of nowhere, creating a massive short squeeze, creating a massive panic in short sellers. So I don't know, Elon Musk has a lot of friends. You don't want to short Tesla for valuation purposes because it has a lot of loyal investors. Anyway, so that in a nutshell is what I think happened with GameStop and some of these other stocks like American Airlines and retailers. Express was another one I did okay on, like $600-700 I made on Express. Same thing, went up from $3 to $6, came back to $3. So if you're able to short these stocks when they go up 100-200%, that's where the money is, because the statistical probability of them coming back down to reality or close to reality, it's very high. So that's about it, guys. This was episode 19. Most likely episode 20 is going to be on Cheesecake Factory. As I said to my 48 subscribers, every 10th episode it's going to be at a restaurant of my choice, a company that I like. And I'll be eating and talking about different stock trading topics and portfolio management, professional portfolio management. And then Cheesecake Factory was a very high winner in our company in 2020. So this was one of the COVID names that we did really well on, along with other ones like Carnival Cruise and others. All right, guys, see you next time. That's about it for this episode.